what is revolving debt. And there's another term for this. It's called open-ended credit. And if you're not familiar with open-ended credit, closed-ended credit, what I plan on covering those two topics this week for sure. But what revolving debt is it's debt that interest accumulates on a daily and a monthly basis versus a fixed amount of interest that you're going to pay. So any revolving debt that you pay, that would be on like a credit card, either like a secured card, an unsecured credit card, or a line of credit like a second mortgage. That would be an open-ended line of credit. So Warren Buffett was asked, don't have any credit cards? That is fantastic. Congratulations. I just read this article, I think it was a little over a week ago, and in the United States, there is now over 1 billion, I think it's billion, $1 billion of credit card debt alone just in the US. Okay, so let me explain this real quick. Let's say I have a credit card with a $5,000 balance. Okay, let's say it's at 10% interest rate. What happens is they'll send me a statement. That minimum payment is usually going to be about 2% or 3% of the balance. So 2% of 5,000 or 3% of 5,000, and then if you pay that, that's the minimum. There's actually there's been some laws that have been passed that show how much if you pay this much, this is how much, this is how long it'll take, this is how much interest you'll pay. 5 years ago, they didn't have this on here. And then, well, if you pay extra, then you can pay it off this fast. So with an open-ended line of credit, how it works is, if you have a $5,000 credit card balance and the minimum balance and the minimum payment is $75, all you're pretty much paying is you're just paying on the interest. And if you're just paying on the interest, then that balance is not going to go down. So when they say revolving debt, that interest keeps revolving over and over and over and over and over, and it never ends until you start paying the principal down. So Warren Buffett was asked, what is the best way for people to have success in their life when it comes to finances? And the first thing that he said was, pay off your debt, get out of debt, stay out of debt, get rid of any debt that you have. Okay? So, and I help people on a daily basis, either with coaching or helping them in different areas with their finances. And the first thing that we want to help people do is pay off your debt, because if you have money that's coming from your paycheck and it's going to another company, whether it's credit card or student loan or auto loan, you want to get rid of that debt as fast as possible, because you are an asset to those companies that are taking your money. It's a payday for them every single month. Every month that someone has debt, that's payday for those companies out there that are running their business. They're not illegal. They're businesses that make money. But to put yourself in the best situation, you want to pay off your debt as fast as possible. Have a timeline. And when it comes to revolving debt, if someone has either $1,000 or $5,000 or $10,000 credit card, what that really means is in 20 years they could still have that debt. Okay, so in terms of the definition of revolving credit or open-ended credit, that's going to involve anything with a credit card. It's going to be a credit card either secured or unsecured. It's going to be a line of credit, either an unsecured line of credit or a secured line of credit, like a second mortgage, a home equity line of credit. Anything where if you just have to pay the minimum, that's probably going to fall into revolving debt. The flip side of any kind of loan would be close-ended, and what I can do, I can share that with you later. So hope